Finding reliable dividend stocks can be challenging if you lack the time or patience to conduct proper research. However, the introduction of dividend growth exchange traded funds has greatly simplified dividend stock investing for regular investors. When it comes to dividend growth, ETFs, SCHD is your best bet. But what are some of the things that make SCHDs a good choice for dividend investors? If you are interested in receiving dividends, learning about the many techniques, yields, and other information associated with companies can be time-consuming. Because of this, the effort involved can be simplified with the assistance of ETFs. If you're an investor, having the option to choose just one exchange-traded fund or ETF rather than over 100 different companies make things a great deal simpler. This is where the SCHD comes in. It's a growth dividend exchange traded that follows the Dow Jones U.S. Dividend 100 Index, which is comprised of the 100 distinct firms that have maintained their stability and steady growth of their dividends over the previous 10 years. SCHD was established in October 2011, and it has maintained a dividend growth rate of 12% on average while maintaining a yield of 3.43%. And by the way, it's one of the least expensive EFTs due to its annual expense ratio of 0.06%, which results in the investor having to pay $6 for every $10,000 they put into the fund. SCHD is one of the greatest dividend growth ETFs, competing with VYM and VIG for that title. However, it has been able to outperform both of these ETFs both in terms of its yield and its overall performance. So, what are some of the benefits offered by SCHD? First, they have a steady improvement in the rate of the dividend yield. Since the beginning of its existence, the dividend yield of SCHD has been increasing at a pace of 12% each year on average. That indicates that the payout amount will increase by a factor of 2 every 6 years. Those already owning shares in SCHD should view this as a positive development. Compared to the dividend growth rate of VIG, which has an 8% growth rate, SCHD is a desirable exchange-traded fund for investors because its dividend is expected to rise at 12% per year, and investors love to see their dividends grow. It is anticipated that the SCHD will boost its dividends by approximately 10% each year. The continued expansion enables investors to reinvest their dividends and purchase more company shares. Second, they have an impressive overall performance compared to the S&P 500. The S&P 500 index measures stock market performance relative to a basket of the 500 largest companies in the United States. It's been utilized as a standard against which funds might measure their performance. SPY and VOO are two excellent exchange-traded funds that can be considered while searching for a decent S&P 500 ETF. When you compare the performance of these two since they were introduced, you'll notice that one of them is succeeding more than the other. If you had invested $10,000 in SCHD and VOO on October 21, 2011, the value of your SCHD investment would have grown by 318.97%, while the value of your VOO investment would have grown by 290.05%. As can be seen, SCHD has been more successful than the S&P 500 throughout a more extended period. That is determined by a combination of many different elements. The S&P 500 is more heavily weighted towards technology than SCHD is. Most of their wealth is invested in dividend-paying corporations with steady growth over previous decades. For instance, the stockholders of many technology businesses, like Google and Amazon, do not receive dividend payments. They reinvest the earnings that they make back into their company. Most of the equities that make up SCHD are considered to be value firms rather than growth stocks. It results in the fund having greater consistency. Interestingly, market cap does not determine the weight of the stocks in the SCHD portfolio. In the SCHD portfolio, allocating more than 4% to any single stock is permissible. The investment portfolio is rebalanced to ensure no stock is overrepresented or underrepresented. So Apple or Microsoft may have a larger allocation than either Home Depot or Coca-Cola. This gives SCHD a yield that is significantly higher than its competitors, resulting in an increase in investors who wish to include it in their portfolio and increase in their fund's price. All of these things contribute to the stock's outperformance compared to the S&P 500.
Now, hold up. Before we go any further, let me just remind you to subscribe to my channel for all the latest tips and tricks on financial planning and budgeting. And guess what? In the description below, you'll find a link to my awesome monthly budget trackers. So click that subscribe button and check out those trackers. You'll be glad you did. All right, let's get back to the content.
SCHD stability. An investor's top priority should be locating funds that exhibit a consistent level of performance. Market volatility, which includes rising and falling prices, can make investors anxious. Having some degree of consistency might help put your mind at ease while investing in technology ETFs like VGT and QQQ, which are expected to continue experiencing up and down volatility throughout the year and over the years. Compared to other exchange-traded funds, SCHD's volatility is lower than most others. In 2022, VIG had an expected volatility of 17.80%, while SCHD had a volatility of 15.28%. Both of these exchange-traded funds focus on growth and dividends, but SCHD offers more consistency. Compared to both VIG and SCHD, the volatility of an S&P 500 ETF like VOO is significantly higher than that of either VIG or SCHD. VOO has had a historical volatility of 19.12%. The SCHD structure is based on following an index that is primarily concerned with high quality and long-term dividends. Because these companies are value companies that will remain steady despite the ups and downs of the market, holding SCHD in your portfolio will provide you with more solid security options. The SCHD yield. Many people have entertained the idea that they should not take dividend ETFs seriously because the yield is not particularly eye-catching. With a yield of 3.43%, SCHD comes out on top as one of the best options. If you're an investor who focuses on dividends, you will want to get in on this. Most dividend kings currently have a yield lower than 3%, and even other ETFs are finding it tough to compete with the dividend offered by SCHD. The current yield of VYM, a Vanguard High Dividend ETF, is 3.04%, which is lower than SCHD's, which is 3.43%. Looking at businesses such as Coca-Cola and Pepsi, which are generally large, we can see that their dividend yield less than 3%. SCHD is a great investment to put your money in if you're searching for a great way to get good yield full of solid dividend-paying firms. A comparison of SCHD's current and former sector allocations reveals substantial shifts. For example, technology and healthcare made up over 20% of assets in the past, which could boost SCHD's historic performance and dividend growth. On the other hand, the fund's existing allocation can make it more difficult for the fund to experience future share price appreciation and dividend growth. Notably, over 54% of SCHD's total holdings have dividend yields that are higher than 4%, which is often correlated with dividend growth rates that are lower. For example, Verizon, a significant investment in SCHD, has a desirable dividend yield of 7.2%, but its dividend growth rate is lower than the inflation rate. Despite these worries, SCHD continues to be one of the most advantageous dividend ETFs on the market. Nevertheless, the fund might be better off repositioning itself to align with its previous sector allocation by increasing its holdings in the healthcare and technology industries. This may result in a modest decrease in the current starting dividend yield. Nevertheless, it is anticipated that this will positively impact both the share price appreciation and long-term dividend growth. SCHD has a significant role to play in the field of dividend ETFs. However, just like any other investment, it warrants careful observation and the flexibility to adjust to the shifting performance and strategy of the investment. So now you might be wondering, is SCHD worth your time? The SCHD worth. The rise in popularity of SCHD can be attributed to its outstanding track record, having increased by more than 42.3% in the last 5 years and 112% in the last 10 years. The present dividend yield of 3.74% is higher than the industry standard, contributing to the stock's overall allure. Something else working in its favor is the endurance of the fund, even during periods of falling market prices. During the same period that the S&P 500 lost around 18 to 19% of its value, SCHD lost only 3.23% of its value, significantly outperforming the market. However, SCHD can underperform the S&P 500, which recently fell almost 6.5%. While the index has gained approximately 8.4%, even after considering total returns, which includes dividends, there is still a significant discrepancy between the two. Tech heavyweights, such as Microsoft and Apple, have been delivering excellent results, which has disproportionately helped the S&P 500 due to its significant presence because of the heat map for the S&P 500's year-to-date performance. In the meantime, SCHD's assets in the technology sector make up only 12.66% of the company's overall holdings. It is essential to have a firm grasp that these funds go through what is known as an annual reconstitution in March. This is when the fund changes the stocks it is currently invested in. So, how do you invest in SCHD? Well, there are a few various approaches that one can take to invest in SCHD. First, you can open an account with Schwab and invest there. You can acquire the shares there if you already have a brokerage account with a company like Fidelity, TD Ameritrade, or Vanguard. There are many different entry points available for investors. Going through your account, choosing the funds you want, and making the purchases all take some time. As you continue to make and broaden your investment portfolio, you can accumulate substantial dividends and enjoy satisfactory returns. SCHD can lead to generational wealth if considered for the long term. Remember, the road to financial freedom is paved with informed decisions, not lucky guesses. And in the investment world, knowledge truly is power. Before we part ways, here's a question for you. Given what we discussed about SCHDs, how do you see this ETF fitting into your current investment strategy? Comment in the section below. Thank you for watching, and don't forget to leave a like and subscribe, and I'll see you in the next video.